So this is a brief video at a high level on how company taxation works as a limited company. It is intended to give an overview. It's not going into any detail. It is just to provide a basic understanding. So, as mentioned on our call, the limited company is a separate legal entity to you as a director. So you are, as a director, you are responsible for the running of it. You're almost like its parent. So it is your duty to ensure that it files its accounts, pays its tax, and keeps appropriate records. Now, the way the tax system works is the limited company pays corporation tax, and then you pay personal tax on your drawings as the limited company. You need to make sure that any expenses that relate to the limited company are paid to the limited company bank account, and that the only thing that you are drawing from the limited company is your salary, your dividend, and any associated expenses. There are other benefits that you can receive, but this is just a noddy's guide, a sort of brief overview on what you need to be taking. So the example we used was taking sales of £100,000 and then other costs within the business of £30,000. As a director, as the only employee, you need to be paying yourself a salary of £9,100. That gives total cost of £39,100. From the sales of £1,000, you take the costs of £39,100, and that gives you a profit of £60,900. Based on those profits, I've been looking to put away 23% corporation tax. So that is 14,007 corporation tax. So you take the 60,900 profit, less the 14,007 corporation tax, and that gives you a profit after tax of 46,893. Now, is that profit after tax? As a director, you are responsible for distributing to the shareholders as a dividend or keeping it in the business if you need it for future working capital. So, for example, if the business was committed to buy a computer and it needed to keep £2,100 in the bank, it would only pay out £44,000 of the dividend. So, you as a director, you pay yourself your £9,100 salary, which is the same as the amount that has gone through as an expense in the business. And then you pay yourself a dividend of whatever you like. It is up to you. Now, as we mentioned on the call, I'm excluding the dividend allowance just to keep this really simple. Your first $12,570 is tax-free. From $12,570 to $50,270, you pay 8.75% on your dividends, and then above that, you pay 33.75%. So, based on the current income on the current example of this business, you'd be looking to pay yourself $41,170 to keep yourself below the basic rate threshold, to give a total income of $50,270. Now, your dividend tax is 8.75%. So the 50,270 less 12,570 is 37,700. So you'd be paying 3,298.75 in tax. Now, that is your responsibility to pay that, not the business. So again, what we were talking on the call was, if you just pay yourself £1,000, every £1,000 you pay yourself, or every amount you pay yourself, if you put 9% of that aside in a savings account, that gives you enough for your personal tax. Okay, so next on to VAT. When you register for VAT, you're actually a collection department for HMRC. So if you raise a sales invoice with £2,000, once you're VAT registered, you charge £400 to your customer on behalf of HM Revenue and Customs. So you'll receive £2,400 in your bank, of which £400 is the VAT man's and £2,000 is your company's income. If then, for example, you buy a MacBook, and as I said, I know MacBooks are quite a lot more money, but it's just to keep the figures simple. If you spend £1,200 on a MacBook, you can recover £200 worth of VAT, and the net cost to you is £1,000. So the amount you're paying over to HMRC is £200. So like I said, it works as a collection agency. The VAT is a tax that the company pays because it's the company that's VAT registered. Next, on to payroll. So we were looking at you paying an employee £13,000. So you have to run a payroll and you have to be registered for PAYE, and there is real-time information rules with HMRC. So if you're paying an employee monthly, you have to submit a return to HMRC monthly on that pay. So we've looked at a salary of about £13,000. Now, as mentioned up here, the first £12,570 is tax-free. So you will have to deduct from the employee's pay slip £86 tax. The NI threshold, national insurance threshold, is a lot lower, and the amount you'd have to deduct from the employee is £55.90. So, whilst your employee is being paid £13,000, you'll deduct £141.90 on behalf of the employee. So you will only pay £12,858.10. So £13,000 is what you pay your employee. You have to pay over £141.90 to HMRC, and then you pay your employee the difference, which is £12,858.10. Now, unfortunately, as you're employing people, you do have to pay employers' national insurance. That is £538.20. Now, as you're an employer with more than one employee, you can get an employment allowance, but for budgeting purposes, because we're a business that's looking to grow, you need to be budgeting for your employer's national insurance. So the actual total cost of employing this employee is £680 and is So as an employer, you need to be budgeting for employers' national insurance. Whilst there's an employment allowance that you won't have to pay this, it's not guaranteed that will stay forever, and you're a growing business, so it won't apply to all your staff, and you need to apply your staff on the same basis. So the total cost to you as an employer will be the £13,000 plus the £538.20. That gets paid over to HMRC. So the total amount for the year you'd have to pay to HMRC would be £680.10. I've highlighted the figures in yellow, which are the amounts you pay to HMRC, and then the figures I've highlighted in blue are the figures for the cost to employ your member of staff. So I hope that helps. The key points is that the limited company and you as a director are completely separate legal entities. You need to think of your limited company as having a separate birth certificate. As a director, it's almost your job to parent that limited company, so you are in charge, or you're a custodian of that company. I hope that helps, and I look forward to speaking to you soon. Thanks.